Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar wavered between small gains and losses, leaving prospects uncertain for the market amid concerns that the US Federal Reserve tightening campaign could push the economy into recession. After last week, interest rates globally was raised by Europe, Britain, Switzerland, Denmark, Norway and Mexico following the US Federal Reserve's Open Market Committee rate hike a day before, as central bankers vowing to keep raising interest rates until inflation has cooled. Looking at the US dollar, the market is currently holding steady around 104.25. And therefore, we can see that the Australian dollar, as the liquidity gets a little bit thinner, and also the market is likely to consolidate slightly into the festive season, holds above the key support level of 66.60.75. If we do see a break there, then that would give further exposure to the downside into the 60-day moving average, where it is outlined here around 65.35.45. But until the break of 66.60, we should not abandon the top side, anywhere from 67.45 to around 68 cents. Technically, the market is negative, so therefore these four candles that you can see that are negative may actually see a little bit more pressure, which is only 30 points away from that support of 66.60. Looking at the euro, the market tumbled slightly overnight, but nevertheless still holds above the key support level, which is at 105.70. That level would confirm the engulfing candle and reinstate the downside to the region of 104.40 and reassess from that point, as the market is likely to stage a small bounce. Technically, we are somewhat negative in terms of the MACD and just mixed on the RSI, while the ADX is now coasting sideways, slightly leaving the bullish case as it overheats. Keep an eye on that support at 105.70. As I mentioned, if breaks, should leave a 130-point drop. Dollar yen is regaining its momentum, even though the dollar is somewhat consolidating. With stronger indicators in play, has put the market focus back on that topside level around 138.40.60 and reassess from there, as a break above here would give further scope up to 139 or even up towards 141.5 as a potential target. Even though the market took the challenge of this resistance around 138, couldn't break it, and now the market's finding good supply there as it trades sideways beneath, but a break would give a significant move to the upside, and as I say, up to 139 to 140.5. Sterling somewhat lackluster as the market holds above the support level around 120.85, and beneath there the key support level of 120.25. With technical still weak, we could still see another down test, so therefore let's see how the market unfolds into today's session. A break of 120.85 will give scope to that level of support before a rebound. Gold was somewhat weaker overnight, backing away from 1,800 and now looks towards 1,783 or even lower down to 1,770, a key support level. A break there would give further scope to 1,756. With technicals now breaking back to the downside, gives little hope of recapturing that 1,800 level, and as I say, way on the support. Finishing up with oil, the market is holding relatively well considering the last 2 days of bearishness, came back overnight stronger, and now looks towards 76.30 and may actually extend on towards 76.35.55 and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look after the intraday report. I hope you enjoy the rest of the day.